please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
From the market opening, Sudarshan, any trade that occurs to you now?
Yes, ICICI Bank and Reliance and Vedant, all three can be independently bought into.
Okay. Well, actually, SBI is the one leading the charge at the moment, 3.5% higher. Okay, first rate is 108 higher, 110 higher now, 112 higher. Nifty is at 10,328, 329. But the Nifty Bank has scaled exactly the high that the pre-opening indicated. 25,840 was scaled. That's 400 higher. Still around that level, 395, 396 higher. So 25,840 is kind of holding. Sensex up 350, 1.06 higher. So it's really the banks that are charging ahead. That's the index which is gained the maximum 1.5%. The others have done not too badly with 1.2% higher. SBI leads the charge 3%, Vedant 2.5%, ICICI Bank 2.5%, Reliance 2.25%, Indiabulls Housing 2.25%, Yes Bank, HDFC, Bharti Airtel. Bharti Airtel has a big foreign loan, so obvious beneficiary of the rupee rising. Ultratech Cement, ONGC, Tata Motors. Well, just about everything is up over 1%. I thought I would only read the one above 1%, but I think half the Nifty is over 1% higher. The sulkers are obviously the IT stocks. So Infosys, Tech Mahindra, HCL Tech, TCS. Exactly the four IT stocks, and Wipro, for good measure, Kotak Mahindra Bank, which already is a pricey stock. But they're like minor losers, very minor. Let's not talk losers today.
No, even beyond the index, Lata, it is financials all the way, really. It's just stacked up out there. Whether it's a Vijaya Bank, IDBI Bank, and of course the bigger lenders, let's not forget them, PNB, Bank of Baroda, all of those stocks up and about. Canara Bank, 3% to 4.5%, depending on which bank stock you're looking at this morning. Okay, beyond the banks, Just Dial, where there are a couple of target upgrades that have come in, that's a stock up 3.5%. There's a bit of a green on Edelweiss Financial as well. That's because of the FII increase. Let's get Petronet LNG. We'll get some of those stocks. They've got added news flow, which is positive. So those are stocks on the upside. Suzlon is recovering a little bit from the damage yesterday. There's some buying on an L&T Finance, which has resurfaced. Religare is holding out higher. So these are some of the names. And let's quickly pull up real estate to see if the impact, the follow-through impact is still there, of the affordable housing definitions getting widened. So Ansal, Nitesh, DLF, Purvankara, there is a fair amount of green on that part of the screen as well. So far so good. Don't think I mean, it's not a morning to be talking of losers anyway. So let's leave that out, because really, apart from maybe a Voltas, there is not much to complain right now where the volumes are already picking up. Anuj, it's green all the way with, I guess, financials really sealing the thunder.
Oh, yes, you know what, bull markets do this, require 3 or 4 days to just, get back what
I was just thinking of the bears. I mean, how badly have they been trapped? 2 days in the hold is a completely different
I think the
place.
Smart bears would have booked out. The indications were there, Surabhi. Let's, not get into that. But Ashwani, thoughts on market opening, and how would you approach individual stocks? Could it be again a PSU bank day? We've seen good start for PNB, Bank of India, these kind of stocks.
See, first thing is temper your excitement, because this is a gap which is extraordinary. So you shouldn't be chasing this gap. But as the market kind of cools off and realizes that, okay, we need to rally, but maybe not at the open and not as much, I would think previous high on Bank Nifty, if we get around those levels, on the Bank Nifty futures, say 25,700, 720, those zones, that would be a good buying opportunity. Similarly, on the Nifty, 20, 25 point dip here, only that will provide you enough sort of risk reward situation. If you buy right now, there could be some selling which happens, and the market could come off. Having said that, I think it's clear that the outperformance is in the PSU banks. But again, try to buy them on decline. A lot of them are now hitting lows of the day, which does not mean they've lost all the gains. But at higher levels, there is profit booking. So at lower levels, try to buy into banks, PSU banks specifically. And also, I think economy stocks are doing fairly well. Metals are moving up strongly. All day yesterday I said metals have probably bottomed out. So I think you should buy it, but maybe half an hour from now.
Okay, point taken, Ashwini, and we will of course come back to you for advice at that time. Sudarshan, last thoughts, any further stocks?
I think it's easier to buy the indices and stay with them, and there will be minor corrections and we simply have to accept them. These are carry forward trades I'm talking about, not a day trade.
Okay, Sudarshan, thanks a lot for that. Larsen and Toubro is making a bit of a move, so economy facing stocks clearly doing well. Sandeep Bhatia still with us. Sandeep, I request you to stay on. We also have Arvind Sanger joining us right here in our studios. Arvind, good morning.
Good morning.
Great to have you in our studios. You bring good luck to Indian markets.
Well, it was good timing.
Your thoughts on the upgrade on India?
Well, it's certainly a pleasant surprise. I don't think anybody was expecting it at this time, especially given that there were some nascent signs of inflation. But I think Moody is making a long-term call, and I think therefore kudos to them and kudos to the government for getting the recognition for the long-term benefits of some of the moves like GST, and so that's I think the main takeaway. I still don't think that we can, from a short-term trading standpoint, and I mean by it over the next 3 to 6 months, we can use the crutch of the Moody's upgrade to stop worrying about some of the risk factors out there.
Okay. Like oil prices?
Yeah, like oil prices. Like oil prices, like inflation, like, the deficit to the extent that the government has to cut excise to not get the full impact of oil prices on the consumer. And there's an election in 2019, so how will the pump priming in terms of any deficit spending play out? So I think there are plans by the government. I've spent the last few days meeting with different people, and one of the things I understand is that there are some plans for some serious disinvestment type of, whether it's the HPCL, which has been long-standing, but others that might provide more of a cushion for the government to be able to do extra spending without busting a hole in the capital discipline or in the budget discipline. But I still think that the oil prices also remain a risk factor.
Okay, it's a great time to disinvest. Arvind, you hold on for a minute. Sandeep has to run for his Macquarie conference, which they are hosting. So, Sandeep, the question to you is, how does this rejig your portfolio?
I think just the announcement doesn't rejig the portfolio. As I've said, we have always been positive on banks and consumption, and that is something which, as a thesis, continues. I think the only thing I will say is that look at the laggards now. So it's not a great day to talk about IT, but I think if we get pressure on IT, for any investor which has over a 2-year time frame, IT may be a good sector to look at, and again stick to the large leaders such as TCS and Infosys. So that's something which is clearly something which you should look at. Again, the capex cycle plays. In fact, if you look at our conference, the highest number of meetings we have seen are for mid-cap names and for capex cycle plays. Okay. So all the fund managers are now looking outside the leaders. Everyone knows the story of the banks. Everyone knows the story of the consumption stocks and so on. But people do want to see whether in the real economy there are still some new stories that they can explore. So which is to me the biggest learning, that the highest number of meetings, for chock-a-block meetings, came for tier 2 stocks, tier 2 kind of companies. So that's interesting. And the other thing which one should do is take every dip in the market as a buying opportunity. There are some concerns, especially on the oil price, which has been highlighted. I don't think that oil price goes to a completely new level, which is above $80 in my view, because there will be a supply side response, especially from the US, in 6 to 12 months if prices go up above 80. So to that extent, I would still think that we'll have an oil price scenario which will be between $50 to $80, a big range, but it will not be in the danger zone for the Indian economy. So every dip in indices is a reason to buy. We still have a long way in terms of earnings growth and GDP growth to come through. So buy this market at every dip.
Point taken. Sandeep, I'm sure you're saying this at your conference as well. Thank you very much for sparing time for us on what must be a very busy day for you. The dollar costs 64.74 at this point in time, so that's 70 pies cheaper from where we left it, no, maybe 60 pies cheaper from where we left it yesterday evening. Okay, Arvind, you know, one of the things that Sandeep said is that a lot of investors are looking at now mid-cap stocks. If growth is around the corner, maybe higher beta over there?
Yeah, I mean, I don't think they've just started looking at mid-cap costs. The mid-cap stocks have been on fire for the last, you know, several quarters. So I think that mid-cap is clearly seen as the preferred place for some of the growthier stories. And I think part of what has happened is that when you had the macro story looking less robust, you were finding mid-cap sectors or companies that were doing much better. So they've been leading the performance. And, you know, if you look at the banking space, the NBFCs we have been leading in the financial space. And now, of course, the PSUs have had a huge move in the last few weeks. So I think that, you know, Sandeep said something which I thought was very interesting. I too believe that, you know, at some point one has to look at some of the more, you know, global players, which we've ignored. Yes, the India earnings recovery is still the favorite theme, but the India earnings recovery theme, the valuations are pretty rich. So I think, you know, in pullbacks, that's a place to buy. But I think that to the extent that some of the global facing IT names or some other, you know, smaller cap subsectors that have been left for dead, there could be some opportunities there. At least we're looking at those if there is a opportunity in a pullback, those could be interesting too.
In fact, IT is rallying. IT has seen a big rally this year, and from the low point again, stocks are rallying. You know, it's been a global bull market, of course, Arvind, and today one more reason is that overnight US market also stabilized a bit. Are you getting a sense that that global sort of scare is also out of the way, or do you see some bit of correction in the global market? Well, because that would be a trigger for us as well.
Yeah, I don't think, I guess scare is too strong a word. Nowadays, if we have one down week, it's a scare. I mean, this is a normal ebb and flow of trading. So I think you had a little bit of a, you know, breather, but I think there's really nothing that we can see right now on the global front that should cause global markets to come off. I mean, if the US, you know, tax bill passage looks like it's moving forward smoothly, that's another, you know, factor that you can check off. Not for the market to go up, for the market not to sell off. And you know, right now we have Fed gradually raising rates, but you know, no cycle has ever died because of Fed raising rates at the early stages of the cycle. And so we're still at the early stages of that cycle. Now there are, you know, risk factors, external shocks, whatever, but we can't see those. So we don't know those till those happen.
Okay. So Arvind, if you can hold on for a minute, the L&T CEO is with us, joining us on the phone line, and that's a large corporate in India. Mr. Subramaniam, good morning, and thank you very much for joining us. So L&T raising money abroad now?
Tata, good morning. No, we have no plans to raise money per se, but I think what has happened is a very positive outlook. As been mentioning earlier, the various deep-rooted reforms that have taken place, there's bound to be some churning which is happening, but I think these are very, very positive steps and signals well both for the country, for the economy, as well as the business as we look forward.
People have been despondent about capex. So you are in the best place to know, even if there is any private capex in any corner, where would you place the date for capex? Some consumer companies are reaching higher capacity.
Basically, the spend is still from the government, public sectors and state governments. And in my view, that's what it will be for another 8 to 9 months to 1 year. Private capital to come back to put large capex projects will take another year or so. I expect private capital to move only from March 19 onwards because of the various structural issues, various debt issues and various structural reforms that are at the moment taking place. Private capital to come back will take some time due to the necessary momentum that has been lost, and also to the fact that many of the balance sheets are not in good shape due to past issues and capital build-up. So I think fundamentally government-oriented movement forward on various massive programs that has been initiated, and that is fair enough as we look at it.
Okay. All right, Mr. Subramaniam. Thanks very much for that view. In fact, that's exactly the point that I wanted to take forward with you, Arvind. The question in India is now that you're looking at this bit of a portfolio reset. You're trying to buy stuff that's not moved in the past. How do you go about doing that? Is it best played via PSUs? Should you be looking at industrial companies, L&T or any others? But as you're hearing that the immediate pop is not coming through, it's still probably a while away. So how do you play cyclical economy-facing Indian equity?
Well, so, if you look at stocks like cement, they've already done well. So if you're looking at other cyclical stocks, real estate is one where you've had a bit of a pop, but there are still laggards in the real estate sector, which could be interesting because real estate has faced a lot of headwinds, RERA, and and now there's talk about Benami property crackdown and what have you. But for the real serious players who are not leveraged, there's opportunity, and then the low-income housing part, some of them could benefit from. So there is the construction companies that are able to benefit from the low-income housing boom and the road construction continuing. So those who are positioned for those would be, would be the ones that could benefit from that. The power sector is in my opinion, one that is the last remaining sector where the government, if they want to fix the balance sheet and the debt side of things, have to take a look at. And so that's one that we're keeping an eye on, that if there is, and this is not about Uday alone, but it's about more than the Uday scheme in terms of trying to, because that could be the other NPA issue for the banking sector that they need to tackle.
Okay. Well, Arvind, flowing from what the L&T CEO said, yesterday I was speaking to Rhythm, and one of the things that Rhythm said is that at long last, probably after 10 years, the cost of capital in India is below the return on equity. And with this, upgrade and therefore the rupee getting stronger, cost of capital perhaps falls a little more. What's your sense? He says usually when that happens, it's a harbinger of the capex cycle.
Well, I don't know that I have the statistics to back that. I find it hard to believe that companies start spending money when their cost of capital has fallen below their,
probably an added incentive.
Yeah, but at the end of the day, companies invest because they're seeing returns on investment because they have capacity needs and the market's demand is there. So I think that part of what will drive the corporate capex cycle, in my opinion, is this whole bank recapitalization along with NCLT. If we can move that forward quickly and move some of those assets from the distressed hands into the real hands, that clears up the deck of one part of the this is a capex that is not new capex, but it's going to unlock, in my opinion, some of the risk-taking capability of some of the corporates once that happens.
Okay. By the way, the sector that's now surging is metals, and Ashwini was also talking about it. Hindustan Zinc is at intraday high. Tata Steel is at intraday high. NMDC has hit intraday high. So a lot of these stocks are now making intraday highs. Is the metals rally well and truly on, Arvind? Globally, it's been the case.
Well, it is. I mean, I think what's going on is, and it's kind of a little bit of a contrast, unfortunately, with India, is that China is cracking down a lot of capacity because they're worried about the environment and, about the air in Beijing and what have you. Just by way of aside, the readings in Beijing are 1/5 in Delhi, but they're still concerned about.
I wonder what the Chinese are thinking about Delhi if they've had a recent visit.
Yeah, but the reality is that they are cracking down. So steel, a lot of capacity is gradually being shut down, and some of that is temporary, seasonally. Some of that is more structural, and so you're seeing that in areas like aluminum, and you're seeing it in steel. So those are sectors that benefit. And the demand side, we've seen this in oil and we've seen this in metals. Global growth is better, global demand is better, and therefore that is also, so along with the Chinese capacity reductions, and China is a very important part of the capacity reduction story, and the demand globally, continuing to look stronger. And, if inflation is coming back, which it seems like it is, it's not all bad. I mean, the metals are part of the beneficiaries of inflation. So that is something to keep in mind.
I guess now the West is deeply looking for inflation. They've had enough of deflation news. Actually, just to point out, Anuj, there has been a little bit of at least profit taking in the bigger stocks, but it is not happening in Bank Nifty. Bank Nifty has remained at where it opened, about 400 points higher. It's now 395 points higher. It's not giving up its gains very easily.
Oh, yes.
Financials, What would you pick at these levels?
Well, that's a tough one. That's been such a market favorite that you know, we're inclined not to add to our. We're already overweight
But you
that
could
sector.
churn from private banks to
Yeah, well, so
corporate facing.
the churn is from the NBFCs and some of the previous market leaders to the PSUs and the ICICIs and the Axis, and I think that is probably a fair way to think about in terms of reweighting that part of the portfolio. But that's been going on for a few weeks now, so today just, you know, provides another opportunity. But I'd rather be buying it when they sell off rather than buying it on the day that they're up a lot.
So, Arvind, I mean, IT, and you see this up close. I'm not sure where this rally has really come in from. Most of the stocks are going back to their 52-week highs if they're not already there. Infosys, again, approaching 1,000. Is there something really changing, you think, in terms of big demand? That's the BFSI demand from the US. You know, what could be the propulsion? Because on the other hand, we keep hearing about the Protect and Grow American Jobs Act, and that's moving a step forward in the House now. So, I mean, how does this all tie up?
I think the worst of the Trump administration talk on the, you know, IT and the H-1B and all of that is behind us. I'm not saying that there won't be follow-through action, but I think we've already discounted that. And I don't think that American companies are ready to, you know, start raising their costs. So they will find creative ways to manage, to pay lip service to what, you know, the U.S. Administration wants, the Trump administration, and at the same time doing what is right for their business. So I think in a bottom line, if there's global growth and there is, you know, financial sector benefits from that, then you know, their capex or their outsourcing part of their story is not over. And you know, I think the main challenge for the technology companies is less about what the Trump administration is doing, even if that gets the headlines, but more about what technology is doing to them. And I think one of the things we've seen is the Indian companies have recognized the technology threat, and what it's going to mean is you won't necessarily see the same employment growth, but that doesn't mean that they can't have profit growth.
That was a reason for the complete, you know, degrade in the sector, the rise of technology and the challenge there. Do you think they've managed to cross over or sort of, you know...
Not really. I mean, I think they've adapted, they're adjusting to the new world, but are they at the forefront of that, or are they ahead of the curve? No, but I think they're no longer sitting there like deer in the headlights, so they have at least done that.
Just a word on the overall, you know, markets now, Arvind. You know, over the last 1 year, a lot of Indian equity ownership has been taken back from FIs to domestic investors. Do you see that trend continuing? And do you think the kind of flows that we have seen, could they, you know, grow so much that could lead to a bit of a near-term bubble creation in the market?
That's definitely possible. I mean, I think at the end of the day, as long as inflation stays under control, and you know, going up a little bit is not, you know, the 10-year yield going above 7% is not going to kill this. But as long as inflation remains relatively moderate, I think that the financialization of assets is a theme that is here to stay on a structural basis. And I think that, you know, India has got such a large pool of savings that at the end of the day, the FIs should not be the tail that's wagging the dog, and it's good for India that you know, that the domestic savings are becoming more important than.
Since you're coming from the United States, clarify this for us. Actually, today morning we were preparing for the tax reform, and how is the House bill different from the Senate bill? We junked all those tables because an hour before we started, we got the Moody's upgrade. But the tax bill has passed the House. It's quite different from what is in the Senate. I mean, the 20% comes only in 2019 in the Senate bill. The number of slabs are fewer in the House bill, and even the set off from the state and the you know, local taxes is less as far as the House bill is concerned. I'm telling you how thorough I am with that. But if that were to get passed and the unified bill is ready by say Christmas or whatever, is there another big rally?
I think maybe a little bit, but I think at the end of the day, yes, it does provide fillip for the market. But I'm not sure how much of that is not already discounted in the market, in the sense that it's now looking very clear. The differences that you highlight are actually very minor. Whether if it's a 10-year tax reform, whether you start in 2018 or 19 is minor, and how much state deductions are allowed or not allowed. are things that the market is not that concerned about that compromise. But, there is a little bit of a risk in the Senate because the margin of error is very small with one senator already coming out against it. They can't afford to lose many. But my guess is that I would expect that that the bill will pass, and I think it'll provide some modest further. The market's been on fire in the U.S. Again, if you take away the last week, it's been great. So it'll help, but I don't know that it'll drive another big rally.
But speaking of that fire, can we expect that they will glide smoothly higher? Or should we? I mean, we have kept worrying about whatever Brexit or whatever Trump election, throwing hurdles, but it's crossed them all with supreme ease.
Yeah, I mean, I think the problem with this kind of a bull market is you almost don't see what is going to derail it. At some point, something is going to derail it. All bull markets end. So let's not fool ourselves that this is forever and ever. But I don't see anything on the horizon. Obviously, Trump is a little bit of a loose cannon, so you don't know if he's going to start something, that'll cause problems in North Korea, or if he's going to start a trade war. If I were to worry about two things, I think trade war would be the most likely one that could cause if he kind of tears up NAFTA and creates major upheaval there. So those are the things that we keep an eye on to worry about. But as long as he's got reasonably smart adults around him who are keeping him under control, hopefully we don't have any train wrecks.
Yeah, you were saying, Anuj, then I'll ask my slightly less serious question, but you go ahead.
As long as the people in charge are not the same who are tweeting maybe for him.
Yeah. Well, he tweets for himself.
Oh wow. So Nifty or Sensex by general election 2019?
Interesting. I don't think in those terms, but I would say that we're at Nifty's at 10,300 right now, approximately. I think that if you're talking now 15, 16, 17 months, right, for the election, if we're assuming May of, then it's more like 18 months till May of 19. I mean, I think 10 to 15% move is very reasonable.
Okay,
very reasonable.
Thanks a lot for your time today, and thanks a lot for dropping by.
And
have a good stay.
dropping by with such timing.
Yeah, thank you. And have a good stay in India. The market, by the way, that bit of dip has been bought into once again. And I think that's something that Ashwini was referring to, that initially there would be some profit taking, and after that there could be a fresh wave of buying, and that's happening now. Look at the intraday chart of the Bank Nifty. We are back to high point. The mid cap is back to high point. Look at a stock like TVS Motor. I mean, TVS Motor has corrected from 750 all the way down to below 700. That stock is seeing a bounce. Asian Paints has seen a big bounce, Pharma seeing bounce, IRB Infra, so it's across the board buying.
And you know what? The Bank Nifty is at the highest point of the morning.
Yes, it is.
So it didn't see a dip and it just goes on gliding higher. The other indices saw buying at that minor dip, if you can really call that a dip. But look at the Nifty Bank, it doesn't even show a dip. It's just gone on to make higher highs and now up at the highest point of the day, 1.7.
Just one more example. I mean, look at a stock like Indian Bank. I mean, if you're looking at the PSU banks, this really is the strongest of the PSU banks, but it had rallied a lot earlier. So it saw some profit taking, but now again, that stock is also beginning to rally. So we are in for probably a really good.
I think we are being warned that we should take a break now. We may not get that luxury. We have got some more big guests joining us back in a jiffy with other big guests who are joining us on The Rating Story.